Not very pessimistic that this 5.2% economic growth is low and may become lower. If I look at the longer term drivers, I'm quite optimistic on China, because it is relatively easy for countries like China to use today's technology to increase efficiency. I think we should separate long and short-term drivers behind economic growth. As an economist, I always indicate that beforehand, because if you talk about economic growth, it can be driven by short-term factors like consumption, export and government spending, but also economic growth is driven by supply-side factors like productivity, efficiency, innovative behavior. So it all depends which factor is creating this economic growth. If it is a factor like consumption that is under attack at the moment, then it is very cyclical. It's only for 1 year or 1 quarter or maybe 2 quarters. If it would be a more supply-side picture with lower growth of the productivity or lower growth of efficiency, then that would be more of a problem. So I think it is a short-term cyclical problem driven by spending components, which in the medium term is less of importance than what you see in the media at the moment. It may change in a couple of quarters in the near future. You also have longer term drivers behind economic growth like efficiency and productivity growth and innovative behavior and so forth. And these drivers are still quite positive and robust in most of the statistics on China. And not very pessimistic that this 5.2% economic growth is low and may become lower. If I look at the longer term drivers, I'm quite optimistic on China. And clearly there are cyclical factors which may have a negative impact for 1 or 2 quarters, but that's very, very short term. The middle income trap is the trap that countries are staying in a middle income level for many decades, because it is relatively easy to move from a poor country to a middle income country. You can execute all kinds of measures to create economic growth. I call that easy economic growth, by putting more people in the market, by stimulating government expenditures, exporting low value added products. That's relatively easy to have economic growth from these drivers. But then the trap is that you are not executing reforms. And one of the reforms is that you have to upscale, you have to increase, you have to move from low value added activities to high value added activities, from low skilled labor export to much more higher skilled labor production. And that relates to all these new industries we see in China booming at the moment. And I think that is a key precondition for having the possibility to restructure the society towards a high income level, and therefore to escape the middle income trap. If we look at success stories of countries that were able to escape the middle income trap and to move to a high income level, like Singapore, like South Korea, then the main learning point there is you need structural reforms. For that, to be able to do that, you need to invest in the educational system. You need to have a sort of innovative context, innovative network, an innovative ecosystem. You have to find the optimum way of competition, competing to each other and working together with each other by putting a combined government, business and the universities together into, for example, a high-tech cluster. The second question is China able to execute it? Now, if you look at fundamental research as a driver for innovative behavior, Of course, we have pioneers like the US and certain countries in Europe, but I really question the paradigm that innovation, that type of innovation is needed. I think all kinds of other innovations are extremely helpful. You can think about process innovation, and you can talk about the more engineered innovation instead of the real R&D. And in that sense, I'm quite optimistic that still for the next 10 years, or maybe even 20 years, and even the OECD indicate for the next 30, 40 years, there's an increase in productivity and hence innovative behavior, because it is relatively easy for countries like China to use today's technology to increase efficiency. So the focus on fundamental research, I think, is sometimes a little bit overestimated, a little bit overemphasized. Be aware of the fact that for international trade, the most important innovation was the container. The container was the most important driver which made international trade more efficient. And that is not really high-tech innovation. So in that sense, innovation as a term is maybe too broad. If you narrow down, then we can fine-tune easy steps to increase innovative behavior without fundamental R&D. Now there is clearly much more sensitivity on China. Companies are trying to mitigate the risk related to China. One way, for example, is by moving part of production outside China. I don't see that happening a lot, but there's clearly a trend that they are shifting part of production, for example, to India or to Vietnam. Like we see with the iPhone at the moment, where all the iPhones were produced in China, and now we see part of the iPhones are being also produced in India. So it is the China Plus strategy that we see happening in terms of supply chains globally. The impact on China is depending on how we look at the export sector. China is export driven, and because of that we see this huge economic growth in the previous years. But I'm not sure whether that is the correct answer. Because if you look at for example, the iPhone, to be able to export one iPhone, you have to import a lot of components before able to export the iPhone. So if you look at the real value added of the iPhone produced in China, that's not so high. Maybe about $15 per iPhone is adding towards GDP, while the export of the iPhone per iPhone is maybe $1,000. So in a sense, China is less sensitive to export than what we mostly feel in Europe and the US because of this export-import relationship. So if export is going down, it's not always the case that the economy is being hurt. In particular, if export of electronics are being produced in China, but all the components are being imported towards China. So in that sense, a lower export does not have so much negative impact. So I think the effect on changes in the global supply chain is related to the structure of the export pattern related to this supply chain. And if low-skilled labor activities related to the supply chain is being moved to countries like Vietnam or India, I think that's a good sign for China for the longer term, because you cannot grow in the longer term based on low-skilled labor. You have to make the adjustment to much more high-skilled labor. And mostly these global supply chains are still related in many cases to low-skilled labor. Now it is clear that globalization is under attack. Many countries don't believe anymore so much in the IMF or the World Trade Organization, so they have a problem with these multilateral institutions. We see a rise of protectionism. We see an explosion of industrial policy in many parts of the world, like the Green Deal in Europe or the Inflation Reduction Act in the US. So that type of protectionism is rising. This is not new. Already in the 1970s, we had all kinds of industrial policy in the West, because it's clear that if you are moving from relatively low-skilled to a more high-skilled society, the market will not solve that. Market forces are not able to solve this transformation. You need a government interference to have this transformation happening. So it is quite logical that if you want to change into new innovative sectors, that government interference is needed, and hence a type of industrial policy is needed. That is even independent on geopolitical reasons. This is an economic way of explaining why industrial policy is happening. Now it is being accelerated clearly by geopolitical reasons, in which the US wants to be less dependent on China, and that Europe wants to be less dependent on China. But there is an economic logic behind it, and I think this will continue for the next coming years, for sure. It's not the case that protectionism will win above free trade. We still believe in free trade, but also we believe in sometimes we have to protect ourselves because of the negative disruptions of free trade. Because free trade can also be sometimes unfair. And you want to protect your labor market. We believe in a positive-sum game. There are winners and winners in international trade. But sometimes we feel that we need strategic autonomy. And to create strategic autonomy, in a sense, means sometimes you have to increase protectionism. So I think it is a trend which will stay there for a while. But again, it is not that we don't believe in free markets. We still believe in free markets. But sometimes you need some additional government interference and protectionism.